Hey folks, welcome to the Rate Update with Dan Frio. My name is Dan Frio, and our goal here on this channel is to educate and inform you guys everything real estate, especially when it comes to the financing piece of the puzzle. So what I'm going to do, I'm starting today, I'm going to change up my model a little bit. What I usually go is through the economic calendars and all this other stuff, and then I post the rates at the end of the day. Well, I know a lot of you guys just want to see what the rates are, but if you want to find out the why, stay tuned. We're going to go over that, and I'm going to explain you the economic calendar and how those events that are going to take place this week, how it probably is going to affect your mortgage rate. So let's get started and see where rates started the day. So this is basically, I'll say it this way, this is where we ended on Friday. So Mortgage News Daily then republishes that rate Monday morning. So what this rate is, this rate sheet is a combination of surveys that Mortgage News Daily sends all over the country to mortgage lenders. They compile that data and they put in the averages up here. So this is not one particular lender's rate. This is an average or a national average. So let me explain to you what this is or how to read these numbers. And then we're going to go over and start going through the economic calendar for the week and the day. So let's go here. The 30-year fixed rate as of from Mortgage News Daily is starting the day today at 5.64. It is up 2 basis points from where we were last Thursday night. So if you're confused, basically, stay with us. I'll explain all this to you. So 30-year fixed rates coming in right now at 5.64. It does come with a cost, and that cost is right down here. I just published a newsletter that I'll share with you here in just a little bit. This is explaining why people are starting to pay points. So check out my social media and you'll find out that you'll find that newsletter there, or in the description down below, you can subscribe. So we go back to here. So where we got it is the 30-year fixed rate, as I said, is 5.64, coming in with a cost of 0.4. Now, how do you figure out how much, when it comes to points, how much that equates out to dollars? Well, it's pretty simple. What you do is you take your loan amount. Okay, let's say, for example, it's 100,000. Then we're going to multiply it by 0.4. Okay, think of points let's change that word to percentage. So let's take that 100,000 times 0.4, hit the percent sign, hit equal. That's how much it would cost you. So that's explaining that cell right there. So let's go through all these. We got the 15-year fix coming in right now at 4.91, also comes in at 0.4 in points. The 30-year FHA, they don't publish FHA or VA and USDA, so we're going to just monitor this. This is the government-sponsored loan packages right here. So let's just follow it through this one right through here. So we're going to say the government package, which is FHA, VA, and USDA, is coming in at 5.2, no cost there. 30-year jumbos coming in at 4.75, no cost there as well. And we have the 5/1 ARM coming in at 4.68. And it is coming in with 1 point. Okay, so this is, we're going to pay attention to how much these costs are on a daily basis, not only just the rate. All right, so then we go down through here and we're going to see the trends over the last 10 years. And we have peaked the highest rates that we've seen in over 10 years here. The trend for the day is what's the likelihood of mortgage rates changing? And right now it's minimum. Okay, which is very good. All right, so let's go over to the Mbs Market. What is this? Well, basically, this is a bond that trades on Wall Street. Okay, that's the yield on this bond is the biggest piece or the biggest component of your mortgage rate. Okay, so how this works is how bond prices work. Is if the price goes up, like we have in this case, it's a plus. If the price goes up, your rate's going to come down. Okay, well, if you see the trend down below, you don't see a lot of up arrows. So you're mostly seeing red, which is down, meaning if this number goes down, rates go up. There's an inverse or a flip-flop relationship there. Okay, so now let's go down to the newsletter that I just posted and why some rate quotes are so different and why points are on the rise. So I would highly suggest you read this newsletter. Like I said, I just posted it on all my social media, and you can also subscribe down below and get a copy of this as well. But let's go to the economic calendar for today and see what's out there that's going to play a role on what's going on with mortgage rates for the day. So we go over here and let's check for Monday. Nothing. Okay, so that's good news. So there shouldn't be much volatility in the market today. All we have coming out this week is Tuesday, is the energy outlook, which I don't think is going to really play any role in any outlooks right now. And then we have Wednesday and Thursday is the only real days that there's anything of substance coming out. We have CPI, which measures inflation on Wednesday. And then we have job information or jobless claims coming out on Thursday, plus the producer price index, which also measures inflation. So we have not only inflation numbers this week, but we also have job numbers. Okay. So that's what's coming out for the week. I found an article today that was pretty interesting. Because there's no economic calendar or events today, let's just go over what's happening with housing inventory, because I keep saying there's an inventory shortage, and that's what's pushing up prices. That along with low mortgage rates. But let's see, is there a little reprieve in what we're seeing right now? Tracking existing home sales is very important in 2022. Inventory usually declines in winter and then increases in the spring. Inventory bottomed seasonally at the beginning of March 2022 and is now up 27%. So should this give us some signs of cheering? Well, let's go down through here, and it's not always as good a news as you think until you really read down through. Inventory is still very low. Compared to the same week in 2021, inventory is down 1.6% from 310,000, but compared to the same week in 2022, the inventory is down 58%. Compared to 3 years ago, inventory is down 66%. So in those out there are saying it's not an inventory problem, well, you might want to check some of this detail out. Here's the inventory milestones that we've been watching. The seasonally bottomed numbers already happened March 4th, based on a lot of the analysts that we follow. Inventory up year over year, likely next week to start. Inventory up compared to 2 years ago. Well, no, it's currently down 58%, and inventory back to 1999 levels. Oh, we're currently down 66% from there. So not good news on that front, but we do have some good news in regards to mortgage rates right now. So if you'd like to find out more about me and my team, all you need to do is go to therateupdate.com. Here's all our information. Let me just explain to you what we do. We are one of the largest mortgage brokerages in the country. Oh, here's what we do for you. If you're in the process of building a house, buying a house, refinancing, we can help you. Here's one of the biggest pieces of the puzzle that we're filling in the void in right now. People that are building. Most of the builders, lenders will only lock you up to about 45 days from the completion of the property, putting you in a really bad situation. So we have rate locks. In one situation, we have rate locks up to 180 days. That's the number one primo package that we have right now. So if you're within 6 months of closing on your purchase, please call us, or on your build, please call us. Okay, because we can lock you in today, and so you don't pick up a higher rate down the road. Another area is of frustration is people's out there looking to buy a house now. They're looking and looking and looking, and they're getting frantic because they're like, every day that I can't find a house, rates are going up. So what can I do? How about if I introduce the lock-in shop to you, where you can lock in today, in some cases 3 months, in other cases up to 6 months while you shop. So to find out about these programs and more, please give us a call. Our number is right up here, 844-775-5626. You can schedule a meeting right up in this area here. You can apply online, or we have this chat button down here. I'm not up next, but I'm probably going to be on there today. So if you see me, just say hi if you don't have a question. So thanks for watching. I hope you like the new format. God bless. Have a great day. I'll see you live this afternoon with some updates midday for lunch. Take care. See you then.